What up? So I had a question pop up. One of my boys, I had seen him at the studio, and then he was asking about, how do the price mechanics work for crypto? How does it go up and how does it go down? And I thought that was an interesting question. I'm sure, a lot of people probably have the same kind of question, and I figured I'd do a video about it. So, um, much like, all right, look, markets that you can trade and you can speculate on. Speculating means you, you predict that it could go up or it goes down, and then you put your money on whichever side of that equation you find yourself on. If you think the thing's going to go up, then you buy it. If you think that it's going to go down, you can short it, which means you bet against it. You know what I mean? You make money when it goes down. But um, you know, any speculative market it has a market. The market is literally like a market, like you would go to, a fish market or a chicken market or whatever. You know that the going rate for whatever chicken, whatever fish is out there, is X, right? And if it's a little less quality, right, or not as strong as another fish, then it gets a Y price. And if it's better than that, the X fish, then it gets a, W price. And, then the market just decides what's worth what. You know what I mean? And the thing is with stocks and speculative markets like that is that that's usually happening in real time. Now, what creates that price is people willing to buy it at that price or people willing to sell it at that price. That's what creates the price, right? So Bitcoin's at 39,000 because people are buying it at 39,000, sustaining its price, right? When people don't buy it at 39,000 anymore, immediately the next buy or sell order. So there's sell orders at 39 and there's people buying those sell orders at 39. You put in a sell order because you have BTC and you want to sell it for 39,000, right? And so now that's a sell order. Now, when we have sell orders in the 39,000 range and they're getting bought up at the 39,000 range, then that's what you get. You know what I mean? Like you buy it at that 39,000 range, and that maintains that price. When the sell orders no longer are coming in such a way that, or the sell orders are no longer being bought at 39,000, then the structure of whatever's facilitating that transaction, whether it be a clearinghouse or digital like it is today, usually, then it goes to that next sell order down, and it says, okay, you know what, so and so is willing to buy at 38,899. So then that sell order gets filled. You know what I mean? And it's these buy and sell orders that create the price. Now, let's say there's only one Bitcoin being sold at 39,000, but after that there's only there's a lot more Bitcoin being sold at 38,000. Then you'll have like a flash pop of 39,000, and it'll come back down to 38 and start filling in those orders in the $38,000 range. You could also have very little orders under 39,000 because people, why would they sell it for 38,000 if they can get 39 for it, right? And so there's no orders under 39,000. One Bitcoin gets sold at 39, and then majority of the next orders are in the 40,000 or 41 or $42,000 range. Boom, just starts filling those orders, and that's how you get the price to move. Like that's literally like the price mechanics of how the market works, and all the markets theoretically work like that. Now there are laws in place that are supposed to prevent price manipulation. Well, we don't want price manipulation because that allows for people who have big pockets, people who are already rich, to affect the price of those of us who are not rich, right? And we don't want that. That's an unfair advantage. and there's laws in place to prevent that, and there are penalties in place should those laws be broken. However, proving price manipulation is a very difficult thing. You know what I mean? So I sold, hey, I'm a whale. I got, $10 million worth of Bitcoin. I sold it all at 38,000 under market price because I just wanted to get rid of it. I needed to get out of the position fast, and I just wanted to get rid of it. And then I saw the price go down to 35,000, and I said, well, shoot, because after I triggered all those sales on the order book, the price went down to 35,000. I said, well, I did have plans for that $10 million, but it was at 35,000. I might as well buy it. It was way under what I sold it for, right? And that's how you have price manipulation, in a way that is seemingly undetectable, right? So it still happens. And Bitcoin, crypto, is under $2 trillion market cap. And to think that price manipulation couldn't go on there is naive, especially when you consider gold at a $7 trillion market valuation for the entire market cap. That is heavily manipulated in the same kind of way, right? And oil is manipulated, and all these other stuff, it's all manipulated. The rich folks get together and they pool their money together to influence markets, to push people out and into buy and sell positions, okay? And that way they get, they start to make money and just literally farm money from the market as they do this. And it's much like the market is expanding and contracting and breathing in this kind of way. Now, that's not to say you shouldn't invest, but the short-term micro trends that go on where short-term things expand, things contract, things expand, things contract, price goes up, price goes down. If you're heavily involved on that side of things, you can find yourself in a lot of trouble because of all this manipulation. But if you have things like on-chain data, which is you could get at a company like Glassnode. You just sign up for their market analysis tools, and they give you on-chain data, which you can't get with stocks, you can't get with Forex. And on-chain data allows you to see whale, shrimp, shark, dolphin movement on the Bitcoin blockchain itself. So what does that mean? All right, so I named all those fish. The bigger the fish, the more money that they have. Typically, whales are like 1,000 Bitcoin or more, right? And you can have whales that have 100,000 Bitcoin. It's 80,000 Bitcoin. There's whales that are that big, and then there's whales that have 5,000 and 3,000 and 50,000 and 20,000, right? And those are considered whales. And then those numbers get smaller, like the types of fish that they are get smaller from there. But on-chain data and looking at Bitcoin wallet movements, this is what's happening. So the Bitcoin blockchain is fully transparent. We just don't know whose wallet is what, but we can see which wallet has how much Bitcoin and the transactions from it and flows in and out of those wallets. Everything's transparent. We just don't know whose it is, right? So it's pseudonymous. That's the name, not anonymous. It's pseudonymous. Pseudonymous. I always get, it's tough for me to say that word, okay? Don't make fun of me. So anyway, we can watch and we can see that, we could tell, if you're on Glassnode, you could say, okay, look, pull up all the wallet addresses at 1,000 Bitcoin or more, or 800 or 900 or whatever. And you start to see what their movements are. And you could see that if they are moving a majority of their Bitcoin to exchanges, then they're, a majority though, right? Then they're going to sell, and it's going to cause the market to come down, right? And that may trigger a cascade of sales where the whales sell, and then people panic, and then the dolphins sell, and then the tuna sells, and then it just keeps going down. And shrimp and tadpoles are selling too. And if you're looking at that kind of data, that can give you an indication of what to do with your money, because whales might be selling, pushing the market down, or whales are accumulating, which means you should probably accumulate too, because they're not going to push the market down because they're in accumulation mode. Or they might push the market down to get a good price, but they're not pushing the market down in terms of liquidating their position. which means selling out everything that they got. Now, I say that to say you can, use those metrics to predict where the market is going to go. It's not, it's not a 100% foolproof method, but it is a good indication of what you should probably do also, if you can, right? So if whales are in heavy accumulation mode, which they have been for, 2 years, you know what I mean? Then, and you should probably be in heavy accumulation mode, just keeping on picking up Bitcoin, buying Bitcoin, buying Bitcoin, buying Bitcoin, or whatever crypto that you have, you know what I mean? But, I would say do your due diligence and pick something that's worthwhile and is probably going to last. But there's a lot of people out there that really don't want anybody to be trading altcoins, and I think that's incorrect, because altcoins move more drastically than Bitcoin does, and you can gain more Bitcoin by trading altcoins, during market movements. And I think that's beneficial to a lot of people. You might not be able to buy a Bitcoin outright, but you might be able to trade up to a Bitcoin, full Bitcoin, possibly, I don't know. Or you could wreck yourself by trading too much and thinking that you know what the market's going to do and you just got in. You know what I mean? You could absolutely wreck yourself doing that. Many people, I've been wrecked before doing that. So I am speaking from experience, right? Now, there was another point I was going to make, but we'll move on. So trading tools that are out there are sites like TradingView. That's what I like to use. I think it's really cool to use TradingView. There are different ways of measuring how the market pattern will predict the market future. And it can get very complex, very technical. Really, that's a whole video in and of itself, but you can start to see micro trend lines on small time intervals, macro trend lines on large ones. You start to see, you start to use like Fibonacci retracements and like the Shanghai something cloud, Nimbus cloud or something like that. You get there's all kind of metrics. There's a new one, the liquid supply shock ratio, something like that. There's all kinds of ways of measuring, you know what I mean? And it's up to you, right, to decide which ones work, which ones you think work, which ones you think don't. And it's all an art, man. It's an art. It's a beautiful art. And it takes, unless you're really good and you're a genius, it takes years. You could be a genius, but it'll take you a long time to learn the violin or to get good at basketball. You know what I mean? And this is a skill. Trading, like using charts to predict trading opportunities, it's an art. It's a skill that you have to master. You have to develop over time, and it costs you money. Everybody has to pay tuition in order to do it. So, keep that in mind and act accordingly. But yeah, man, that's how price goes. What now? Oh, okay. This is what I wanted to say. Okay, so short-term trading. Right, you're going to be under the influence of whales and whatnot. Long-term trading, right? Long-term trading, being patient and just waiting for the market to do what it's going to do in order for you to benefit. That's the key here. You do that. If you get into that kind of habit, then you increase significantly the likelihood of you making a profit. If you keep looking short-term, man, it's going to be tough. You know what I mean? You don't know what kind of movements are happening. You don't know what kind of news comes out to affect the market, et cetera, et cetera. It becomes difficult, So the longer your time frame, the less you have to worry about all that price manipulation and noise and all that stuff. The other thing to consider is that we're talking about a brand new technology that is emerging, that is, increasing its rate of adoption, that's being adopted by institutions, governments, large, Fortune 100 corporations, Fortune 100 global corporations, things like that, being used as, tools within times of war in some places, many places of economic turmoil, you know what I mean? Many places of rampant, out of control, wayward inflation that's destroying people's life savings, things like that, right? When you look at it like that, you know, you can seriously begin to consider just how powerful the technology is, right? And looking more long-term, far more long-term for your projection, for your position in the market, can give you, you know, amazing results if you can be patient. And that's what we have with Bitcoin. With Bitcoin, cryptocurrencies, that's exactly the scenario I think is happening. And, you know, there's a ton of altcoins out there. I don't know what's going to be the winner at the end of it. I don't know. You know, I've seen many altcoins come and go. Things that everybody was said, the Ethereum killer, blah, 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 you know, came and went. No longer here anymore. You know what I mean? Corporation is insolvent. IOTA was one of those. Was going to be like this major player. And after the 2017 bull run, the guy was like, you know, it's cool. I made enough money. I'm good. I don't really need to work on anything. And he didn't work on anything. And then, you know, as, you know, the market began to resurface, he decides to come back on the scene. You know, this is the kind of stuff that happens. You know, so I don't know what else is going to be out there. But what I do know, Bitcoin has always been the number one. And it will always be the number one cryptocurrency. It's 60% of the current market cap right now because of a lot of reasons, which I can explain in another video. But then Ethereum, you know, hasn't, you know, sometimes it's flipped from number 2 to something else. But right now it's like, you know, it's a big majority of the market. Like, you know, it holds a big market share. And it's a utility coin. Like, everybody's building on it. A lot of people are building on it. So I don't know about them other coins in the long term. I think there's a merit to using those other coins in the short term, though, for sure. But I don't know about that long term joint. I don't know. But in either way, you know, Bitcoin and Ethereum long term are, you know, holds that you should seriously consider making permanent positions, looking for permanent positions in your portfolio. And look, I'm not saying Ethereum is foolproof. It's bulletproof. I'm not saying that. There are some flaws in Ethereum, but I think that they've got the best developers working on it. There's so much market share. There's so much utility being built on it. You know, to count it out at this point in time, I don't know. So yeah, man, that's my 2 cents. You know what I mean? Hope everything works out for you. Hope things go well. I hope this message finds you and your family and your loved ones in the best of health and spirits. I hope that you are having a great time in life. And if you're not, I hope things get better. Holla at me. Be safe. Peace.